What is going on, traders? Welcome back to the Traveling Trader. Happy Tuesday to you and happy first of the month. First of the month means that we're doing our 0.03 Bitcoin drawing that we do on the first of every month for the diamond traders and above to reward those and give back to the community. So if you want to be automatically entered, sign up. Link is in the description. Obviously, that gives you access to the stock and crypto trade alerts as well. So speaking of crypto, let us get right into it. Looking at the crypto market cap, Bitcoin dominance is falling, continues to fall under 70 after it hit a wall. If we look at the Bitcoin dominance chart here, this is the weekly Bitcoin dominance chart. You'll see that we hit a wall of resistance that we hit back in the middle of 2017, and that's right around between 70 and 75% on the Bitcoin dominance scale. And you'll see we hit that again, and now we are falling just shy of resistance. However, with most of the alts also falling in USD value by the same percentage or more than Bitcoin is falling in USD value, there still isn't a chance for the alt season to flourish. I personally don't think that alt season is really a thing anymore. I think that the crypto landscape was different. That's when all of the projects started popping up, all of the ICOs started popping up mid 2017, and there was a certain feverish fandom about crypto that just doesn't exist anymore. And I think people are a lot more savvy now with regards to which projects are going to succeed or not. So I personally don't think there'll be an alt season where, you see the majority of alts gaining against BTC. I think it's more of an individual coin's price action in their specific chart. All right, let's not waste any more time and look at Bitcoin. Looking at Bitcoin on the weekly, this is a very interesting pattern because the weekly obviously allows you to see a more higher level time frame and give you a clearer picture sometimes of what's going on. We are currently still in a bull flag. This is almost a textbook bull flag pattern, bouncing off of the 100-week. I've been railing about this for so long that Bitcoin is due for a retest of the 21 weekly EMA, this white line. Most people didn't disagree with me, at least not from what I saw in the YouTube comments as well as in our Discord community. However, there were a few people that questioned why must we retest the 21 EMA. Well, it's because these things are dynamic, right? It's not like the MAs or EMAs are just a static line and you're saying Bitcoin it has to hit that price at some point. They're dynamic, and there is a natural regression to the mean with anything, including with markets, right? Anything in nature has a natural regression to the mean, including markets. So retesting the 21 EMA, as I said time and time again for the last, I want to say 5 or 6 weeks, it would have been extremely weird if Bitcoin hadn't retested that soon. And then obviously we were looking at the low volume and low volatility, and that is just a recipe for a big move. And in this case, it was a big move downward, as you saw with last month's or last week's candle, right? You have the biggest weekly drop, I think, since 2018, I want to say, since the beginning of 2018. So this was almost a 20% drop in a week here. Now we are finding support on the 100-week moving average, which is this yellow line here. And, there's question as to whether we'll break down further. I mean, these short-term moves are the hardest to predict, and everyone wants to be right? But the point of TA is not to be right. The point of TA is to make sure that you have a framework which you can base your trades around so that you can maximize gains and minimize losses. So in my view, in the short term, it's a situational basis. It's a conditional stream of outcomes. So if Bitcoin does start to fall below the 100 weekly moving average, the next logical support level is the 50-week moving average, and that is around $6,800 right now. I'm not saying we'll get there. I think that Bitcoin does look so far. I mean, it's still early in this candle, but it does look so far like it wants to bounce off the 100-week. I will say that we do need to get some volume in there, or else a rejection is imminent. With low volume, especially in crypto, right, prices will have a hard time breaking resistance or holding support. Switching gears, I'll show you what I mean by this. We had a short on ETH BTC, and if you want access to the trade alerts, link is in the description. I sent out this short alert as well as all the other plays that I'm doing in the stock market and crypto. But we sent this short alert on ETH BTC as soon as it hit 22,000 sats, right? And the reason that I was so comfortable placing this short, besides the fact that it is a low risk, high reward play, is we were nearing this resistance level that we've been trying to break. Obviously, we tried to break it back in July, got rejected heavily, went all the way down to 16,000 sats, came back up, tried to break it in September, got rejected, and we're now trying to break it again. Well, the more that a level is retested, right, the more firm it gets, especially with low volume. So what I was saying about Bitcoin with regards to, us needing more volume or else these levels will fail, it's the same thing that applies here on Ethereum. The reason that I was so comfortable placing a short is because the volume is terrible. If you look at the OBV, the volume is nothing to write home about. And if you look at the individual volume bars, you'll see that as soon as we have any type of rally, we get these mass sell-offs on ETH BTC. So, I was comfortable putting it because we didn't have any volume here retesting this level. So without any volume, the likelihood of getting rejected at a strong resistance point is very high. It's almost an easy read. So same thing with Bitcoin. We will need volume here, or we will either get rejected if this weekly bar or the next couple of weekly bars do go up to the resistance point, which is a little over 10,000. If you don't see any volume here, it's a pretty easy short play. You'll know that we'll get rejected at resistance. And even worse, if we don't get any volume, this support might get rejected if we don't climb any higher. So keep paying attention to the volume. Look at things like OBV or money flow or VFI or even the VPVR. There's so many different volume indicators, but you want to keep paying attention to volume, especially in crypto, because volume dictates everything. It dictates the pace of the game, right? Looking at the daily, you'll see that we're forming this descending channel. We did put a leveraged long at Bitcoin at support. Again, this was a low risk, high reward play, and we made almost 80% on a 10x leverage. Again, that was sent out in the trade alerts. So sign up if you want. And the reason that I was comfortable placing that was because we were close to support, right? So your stop limit can essentially be right under support. So it's low risk in that you won't lose a lot of money because you can exit very close to where you entered if things go south. We were oversold on the daily for the first time since November 2018, right? And we continue to bounce off of this 7,800 level. Now, clearly resistance is the 200 moving average. We keep hitting 8,400 and keep getting rejected. We are seeing some decent volume coming in. You see this little uptick in the OBV, but we'll need a lot more to get up to the 10K and above levels. So right now, the 200 MA is resistance. Once we pop above that, we might see a rally eventually up to around 9,800 to 10,000, at which point I'll take a look at the volume again. If it is weak, I will be shorting the hell out of it at this level, right? So trend is your friend until the end, and currently it is clearly in a descending channel pattern on the daily. For the long-term traders and the dollar cost averagers, I mean, we're still very good here. If you look at any of the Bitcoin price models over the long term, you'll see that we are still in a very viable situation. Bitcoin looks like any other market, any other commodities market where you make higher highs as time goes by. We now have almost 9 to 10 years worth of data to corroborate this. So Bitcoin is not the next tulips market, right? As some like to call it, even as late as last year. So, I mean, ostensibly we will be hitting the 50 to 60K range eventually as the next high. I don't know. I'm not a fortune teller. Nobody can tell you whether that's 2020, whether that's 2023. All you know is that it will establish higher highs as time goes by. The distance between these two all-time highs here back in April 2013 and November 2013, I mean, that's just 6-7 months between this high here in November 2013 and December 2017. We're talking about 4 years, right? So these things are not so cyclical where you can predict at what point it will hit the next high. And that's why if you have the aptitude and the patience to swing trade, you can make the most out of the market by continuing to do things like we did with the leverage short on ETH or the leverage long on BTC. And if you do have the time and you're interested in learning how to trade, how to read charts, how to set stop limits, how to set trailing stops, how to trade with leverage. If you need help with any of this stuff, I do offer one-on-one training. I take a maximum of 10 people per month. It is October 1st, and we do have a couple of spots open. So hit me up if you want to engage with me on the one-on-ones, we do a total of 3 1-hour long video conferences per month, and you can sign up for as long or as short of a time as you would like, right? So same link is also in the description. Looking at the traditional markets, we do see a drop today of about 1% and change all across the board. That means that precious metals like gold naturally is up around 1%. With that said, with the markets shifting like this, there are some really great opportunities because the traditional market offers you endless amounts of possibilities to play the other side as well, right? Like the inverse side as well. We did have a short on Boeing when it hit resistance here. Just like crypto, you know, we're hitting resistance with low volume. This is a recipe for an almost certain rejection, right? And we shorted Boeing at over, what was it? Over 385, I think it was. Might be even higher. It's currently at 376. Very lucrative short play here. I'm looking at UWT, which is this is the crude oil ETF, right? It's hitting our support level again. I mean, we've been trading this for most of the second half of 2019. Very easy range to trade off of. You know, every time it bounces off the support, you could sell close to resistance. And the trades off of UWT alone could have paid for most of my expenses in 2019. So UWT continues to be a very lucrative well that we go back and dip our hands in and exit when the market does start to rally back to resistance. So I'll continue to play the plays on UWT. Again, all this stuff is sent out in the trade alerts. Disney is hitting or has already come to the massive support zone that it has been in since April. It's launching its streaming service next month, and Disney is definitely looking undervalued here. So I'm eyeing a chance to pick up Disney at discounted levels. Anyway, there's so many opportunities. We can't possibly go over all of them on the video, but that is just a glimpse of the stuff that I'm looking at. Subscribe to the channel if you haven't. Hit that notification bell. Leave a comment if you have a question, comment, disagreement, agreement, whatever. Hit that thumbs up if you got anything out of this video. Sign up if you want access to the trade alerts and or the one-on-one consultation training with me. Stay safe out there, traders. Peace.